Welcome to TradeTheNBA.com. This is John. This report is for the 29th. Well, more of the same. Fight back up, come above the ABM values, and we continued through there. We were seeing a decent improvement in the steel, and interesting, coming off this steeper move. Now, it wasn't enough to get above the 13.5 here with the steel. It had been. We would expect the big blowout to the upside over the highs here. So we're finally getting green into the new zone, and negative 6.8 on the red is also above the 7.5 zone. So not overbought either. Those are powerful signs. Actually, if we look at our 50K, we haven't done that in a while. We've had a series of nice consecutive upwinds. This one was an interesting one because bought here, and then the secondary ad reduced the trailing stop to a lower point. So even though it's 246 there, you have 243 and 252. If we look at the performance report, I think it should be right at the highs. But this equity curve is going to be so much better as we have the improved input readings, and that it's going to be phenomenal. Very excited about that one, without question. Let's move on to NASDAQ. A little bit better. You see it's all the way back to the highs already. And the Dow, still slightly behind, but much better. I mean, it only needs to get right there. So, day or two, and we could have equilibrium again, which would be positive for the potential of an up move. Gold couldn't sustain it. We expected it to come down to the lows. We may only do this 50% retrace. I mean, they didn't even do a Fibonacci on it yet. Let's take a look real quick. See where it puts it. Yeah, 50% right where it closed. So dip back below that. Anything above 126.36 range. So that's what I would be looking for, particularly given the fact that you had a decent move, and at this particular point, you're now below the red line. Now, obviously, I expect it to continue until we get a move back above the red line, and we would need to see a turn of the red and green at this particular point. You've had the single wave; it's going to roll down. It could take a few more days for that to actually finalize itself, and obviously, bonds, crazy, getting back up near the highs, but you got nowhere to go. Nothing you can do but go for yield. Went too fast there and lost the euro. It's still right within our range. Not doing anything in particular. Not expecting it to either. From a case 4-1, with a nice in-between moves. We had some nice dips of the orange below the red line right there, and steel at a reasonable point at that level, and only rising to go back above, and then gave another continuation when it dipped back below from above 7 to below 7 right there, and dipped a fraction, but actually moved back above it. Now, overbought, a lot of this is going to get retraced, refilled. No big deal. You can see it on the 5K a little bit clearer. There we go. We had this buy signal. Posted this one as it was taking place right there because we had these steels, obviously, move way up there. Orange dip below the red DOC here, and then we finally moved back below the 7.5. Shakeout was rising, and one bar before closing of long algo, which was a nice one, but it took a while to develop. You hit the short algo, you kind of came through, ended up with a couple more dips of the orange below at that particular point, and obviously it took off. So it took a little while, but then finally cyan below red, and it was all over, and that was straight up. But it was looking at was this one. It should have been, even if it signaled an immediate reversal right back to the upside. Take a look at that configuration a little tighter because no real reason to move into a short category. We didn't have positive exchange or anything like that. So that's a good one to see an anomaly like that because it lets me get in there and make adjustments to it. So no objections to that whatsoever. But all in all, I think the market is rebounding nicely after the debate. They are satisfied with the status quo, and I would look for continuation to the upside with some of these details. We're not going to see any Fed action, so the market's pretty much going to be at will. So I think the polls will start to have a greater impact as we get into October, because that is where we start getting to crunch time and where money has to be positioned. And that's going to be an interesting one. very exciting. We're just going to have to follow the reading, see where the money goes. It's always the answer. As always, though, continue to look for me on the Skype chat. Trade well. We'll talk to you later.